What is up, guys? Dirk here. Happy Monday. In today's video, we are once again going to look at the higher time frame charts to be able to determine at which levels we get continuation of the bullish trend or invalidation. We hit this 25k level recently and we're kind of stuck at resistance here, and a lot of people are watching this now as, are we going to get rejected here and go back down? If we go back down, how far down do we go? Or do we simply continue to blast straight up through these various levels? So all of that is in today's video. Grab yourself a coffee or your favorite beverage, smash the like button, and let's get into it. All right, so I want to start out here with the weekly chart of Bitcoin. And as you can see here, we have the 50 moving average in blue and the 200 in red. And this is basically very, very important because these are the ones that help us determine on a large scale whether the trend is completely bullish or bearish. Now, as you can see, if I zoom out, we go back to 2017, basically the entire price action from 2017 has been, for the most part, above the 200-week moving average here in red, as you can see. And it held as support in the 2018 bear market, held support on the crash of March 2020, and it actually broke for the first time as support in the bear market last year. Now, you can see we came back below it, went a little bit above it with a fake out, and ever since then, we've been below the 200-week moving average, which technically is bearish. Okay, it's simple to see. Above it is bullish, below it is bearish. And we are sitting right at that resistance over there. And you can see this is a very important one, in my opinion. It's basically just this whole level here. It is also the top here of the attempt to reclaim the 200-week moving average. So 25,000 was the high in August. It is now also the resistance of the 50 and the 200. Okay, so we're at an important level here. If we can flip this, we reclaim both of these moving averages with a weekly close above it, even better, 2 consecutive weekly closes, then I think things start to look very, very good for a potential move towards maybe around this area, around the 32 firstly, but then also the Fibonacci golden pocket could very well become a target, which is about this high, these highs over here, high 40,000s, okay? And this is nothing new. If you've been following me on the channel, if you haven't subscribed, by the way, you can see in 2019, that was what we had here too. We had this entire move to the Fibonacci golden pocket. So a rally to 48,000 would be the Fib golden pocket. It would not be that impossible, especially if we can reclaim this 50, 200 moving average resistance area around 25k. We need a weekly close above it and things start to look very, very good for the bulls once again, in my opinion. Now, of course, there is also the possibility that we do get rejected here, but based on the monthly and the weekly time frame, it doesn't really look like that is something that that I expect at this point in time, unless there is some sort of black swan or something crazy happens in the next week or two where everything crashes once again. But it is not really looking like that is going to be the case. In fact, we are starting to see more and more the narrative that China is now starting with quantitative easing, with QE, just like the West did during the health crisis afterwards, and we got this major bull market. We're starting to see that, and there's starting to be talks about this is what is happening. China is injecting money again. So this might lead to a massive, massive rise in risk assets such as cryptocurrencies. The speculation could be there, and that is something that might actually continue to push this a lot higher, this move that we've seen so far in crypto for the last couple of weeks. And the important thing to understand with crypto is that Bitcoin leads the market. So where Bitcoin goes, altcoins tend to follow. As long as Bitcoin is trending up or ranging sideways, it's going to be good for altcoins. So I'm not looking at individual altcoins here, because the most important thing is to understand and get the direction of Bitcoin right, because as long as it's continuing higher, then altcoins are going to get very interesting, and they're likely going to outperform where, you know, if Bitcoin does maybe a 3x, you can look at altcoins doing a 10x or a 20 or a 30x, okay? That is generally how the relationship works. If Bitcoin gets rejected and goes back down, well, the whole altcoin market is probably going to follow Bitcoin and sell off once again. So it is very important to keep an eye on Bitcoin for the overall direction of the market. And then if you know the direction there, then you can use altcoins kind of as a way of leverage to outperform Bitcoin's multiples, but with altcoins, even trading spot, if that makes sense. Now, one thing that we don't know yet, but we will know in about 8 or 9 days from now is when the monthly close for February closes. And this is also a very important one to watch. The 50-month moving average over here, just a simple 50 moving average. It is also very similar to the 200-week moving average, but you can see it acted as support here, and basically most of the time the price action is traded above. We got below it, and then in January we got this massive green candle that closed right up against that 50. And right now, as I'm making this video, the price is currently a little bit above that 50. If we get a monthly close back above this 50 moving average, I think it really increases the chance for the bulls. I think that's also going to be very similar to getting that weekly close above the 50 and 200 week moving average, what I just showed you. But if we can close above here, I think we can get continuation here to the upside and see that potentially 32,000 to 48,000 in the coming months. So this monthly close is going to be important. Make sure you are subscribed to the channel down below, because on the first of each month, I will do an update on the monthly close, and then we'll cover how this ends up looking at that point in time. Now, just from an observation point of view, my sentiment, what I see with the people I talk to and on social media, there are still a lot of people in disbelief. There are still a lot of people thinking that this is a bear market rally, that this is a scam pump that's going to get completely retraced. There's a lot of people sitting on the sidelines who didn't buy in at 15,000 or 20,000, and now that it's at 24, 25,000, they're waiting for a pullback to be able to buy back in, because they're scared that if they buy in now, it's going to pull back, which is a valid concern, of course. The point here, what I'm saying, is that there is still enough bearish sentiment, in my opinion, for this to continue going higher. If everyone is full-blown euphoric and bullish on the markets and thinking we're going to all-time highs, that is usually when the sentiment gets too one-sided and we have to start being cautious that a reversal is near. For me now, I kind of feel like it's at least 50-50 between bulls and bears, and maybe even still more of a percentage leaning towards a bearish side, disbelief, thinking we're going to go back lower. So, sentiment-wise, that is still a good condition to be in if we want to see more upside continuation, because more than half the participants don't believe that we're going higher, which means they're still sidelined, which means if it continues going higher, either their shorts are going to get liquidated or they're going to end up FOMOing in much higher, which still drives that buying pressure. You know, as it continues going higher, more and more people finally get off the sidelines and feel like, okay, well, I've missed it all this way. I don't want to miss the rest of the ride up. And that money just keeps trickling in or flowing into the markets as it continues going higher. So sentiment-wise, I think we're in a good position potentially for more upside also. The only thing short-term that might be a little bit concerning is the fact that we are now seeing a bearish RSI divergence on the daily chart, as you can see over here. So since this move over here started grinding up, we had a little bear div, we pulled back over here, and then we got that second move up. But that move up led us to higher highs in the price, but lower highs on the RSI, and that is a negative divergence. And usually you don't want to be seeing those on higher time frames like the 4-hour, 12-hour, or daily, because they tend to be warning signs of reversals. Now, I will show you in a second, when we go back to 2019 and look at the chart there are examples where this bear div only pulls back a little bit and then the trend continues higher. So it is not necessarily a complete top here. Okay, it doesn't necessarily have to be that, but it could be a bit of a warning that in the short term, we'll have to see what happens over here. It could also be the setup that we might have a range over here with the high and the low, and that we see a bit of the sweep of the range, deviation here to the upside, and then a drop back into it, and finally that correction to 20K before going higher. That is also a possibility. So it could be possible that if we get this upside move and we get a couple of days above here or more wicks above this high, that we could potentially be looking for a short position just for the short term. If you're trading that, right, we could be looking at something like this, where there's a potential for maybe a 1 to 3 or 1 to 5 risk reward on the short side, shorter term correction. Again, as long as Bitcoin stays above the 3-day 50 moving average, above this 200-day moving average, so as long as Bitcoin is above about 19,000, I still think the trend is bullish. And even though we would get a pullback to 20K, that would still not invalidate the bullish trend, because it could very easily still just do that and then just continue going higher after that. Okay, and that would let the bearish divergence here play out, which would be completely okay, and then we could continue higher than that. So this is a possibility. this could be a nice trap over here in the short term, where we're basically doing exactly what I said in this video. We get above the 50, we get above the 200-week moving average, okay, which would be bullish. Technically, in the longer term, it would trap everyone thinking we're going higher immediately. Then a nice pullback to 20K, it would wreck all the late longers and the people who thought we've finally broken down. And then once we're here, everyone gets super bearish again, and then we can continue going higher. This is a possibility that I think has a decent chance of playing out. So keep an eye in the next couple of days, and maybe even this week, if we get something like this, that this could end up being a trap. Okay, so just zooming out a little bit here to show you also this bearish divergence on the daily. It was also present over here at this top, right? And that led to obviously a lot of downside. You can see we've had a lot of bearish divergences here at the previous top too. But as you can see here, what is interesting, if we zoom in a little bit more at this specific top, so that was around the $65,000 high, you can see how long it does continue going before it actually plays out, right? So we had the first bear div over here, but even then, yeah, we got the pullback, which usually happens. We got a new high over here and a lower one there, and then we got the pullback again, and we got a new high over here. So before this ultimately rolled over in the May 2021 crash, we still ended up going a lot higher, right? So just because you see that bear div doesn't necessarily mean one type of outcome, but what we do usually see when we have the bear div is that we do at least get some sort of pullback. Like over here, we had that bear div. It went from 57 to 42,000. Then it went back up again, and it went from 60 down to 51. So those are still big moves. Okay, over here we had the bear div, and obviously that was the complete top. Even here, right, we had a bearish divergence on the daily, and you can see it made that higher high, lower high, and then we went here from 52 to 40,000. So that was quite a significant drop in terms of price. But that did not end the bullish trend, and we ended up going from 41 there to 69,000. Okay, and I'm thinking maybe we're looking at something similar in this case, where you don't necessarily have an end, a top to that. Okay, we had a move, bear div, pullback, and then a continuation. In a similar way, we've had a big move over here. We could get that pullback over here based on the bear div, like I showed you here with the short setup, and then a continuation. So not necessarily a complete drop back down and all the way back down, but a drop, reset those indicators, liquidate all the leveraged longs and the late FOMO buyers, suck in the bears once again as a trap, and then continue higher. I think that is the scenario I'm leaning towards the most. Obviously at this point, if we get this and it does not bounce and it continues lower, then we reassess. But like I said, as long as Bitcoin stays above the 3-day 50 moving average around about 19,000, I am still bullish, and I still favor a pullback and then a continuation higher in these markets. And before we wrap this up, I just want to take you back to 2019, because I think there's a possibility that because of the 4-year cycle, 2019 is similar to 2023. So far, it very much is. We got the rally starting, as you can see, in January 2019. We started and we ran up to over here to June. Right? So far, we got our same rally starting in January of this year. We've moved above the 3-day 50 moving average in the same way as 2019. And that's where it's going to be interesting. Are we going to get to see a rally to the Fibonacci Golden Pocket, which would be $48,000 currently by about June of this year? So far, it is looking good. We need to reclaim the 50 and the 200-week moving average. If we do that, I think the scenario looks more and more similar. But you can see over here, we also had a bit of a bear div over here in the 2019 run up, as you can see over here. So we got a higher price, more of a flat top over here, and then it continued even a little bit more. Over here we got that bear div, okay, and you can see over there we got the bear div too on the daily, and it did result in a little bit of a pullback, but then we got the continuation. So you can see it went from about 9,000, it dropped back to 7,500. So it dropped back by about $1,500 at that point in time, which was about 20%. We're looking at about a 20% drop right now from 24,000 or 25,000. We're looking at a $5,000 drop, which perfectly lines up with what I said. If we drop from about 5,000 back down to 20,000, that would be very similar to this. But it stays above this moving average here, the 50, and then we get a continuation. And then it went from 7,500 to almost 14,000. So it almost did a 2x. So if that same setup repeats right now, this is pretty much exactly what happened in 2019. okay? Whether we drop from here or whether we still get a bit of a deviation, I think we do, because that would be the easiest way to trap people into thinking we're breaking out. So let's just say we go to back above 25, maybe 26K. Then we get a 20% pullback in the same way we did in 2019 based on the bear div, based on this trap, and we drop back down. 20% drop, again, is $5,000 drop. We drop back down to 21,000 or 20,000, probably sweep this low over here, and that would set us up potentially for a continuation where if we get a 2x after that pullback like we did in 2019, would take us to high 30,000s, maybe even into the 40,000s, and that would basically be almost an identical repeat of 2019. And since that 4-year cycle has been repeating for the bull market highs in 2013 and 2017 and 2021, maybe 2019 is the same as 2023, 4 years apart. We will know for sure in like 4 or 5 months from now when it gets to the middle of the year if that played out or not. But basically this is what I'm seeing right now. A bit of a bull trap coming up, potential sell-off to 21 or 20,000, and then look for bottoming signs with a potential continuation into the 30 or 40,000s over the next few months. Let me know what you think in the comments down below. What are you looking at? What do you think is going to happen? Do you think China is starting the new bull market? Is there QE coming? Let us know your thoughts down below. Subscribe to the channel if you haven't done so. Smash the like button, it does help the video get out to more people. And if you want to do any sort of trading, whether it be leverage or spot, personally I'm using BYBIT. So for example, for shorting this market over here, that is perfectly easy to do on BYBIT exchange. If you use my link in the description down below, you can get the maximum amount of bonuses, up to $30,000 in deposit bonuses. Obviously there's terms and conditions, and you will be able to be eligible for other prizes, be able to participate in my own trading competitions that I hold every month with other prizes, and so on and so forth. And in general, it's just a good place to trade where I do it personally too. So if you don't have a BYBIT account yet, use the link in my description down below, create one, and good luck with your trading. I'll see you in the next video.